Hi, Assalamualaikum. We are from BA2422A. We're gonna talk about performance of Top Glove Corporation Berhad. Before we begin, let me introduce my friends.
Top Glove was established in 1991 and headquartered in Malaysia. Top Glove is the world's largest manufacturer of glove. It started with one factory, one glove production lines, which now has 750 production lines and 100 employees. Top Glove produces wide product range, which now conclude non-glove segments, which are face masks, exercise bands, household product, and many more. The executive chairman of Top Glove is Tan Sri Dr. Lim Wee Chai. Top Glove was listed in Bursa Malaysia in 2001. Over the past 20 years, Top Glove has shown steady growth with a compound annual growth rate of 23.1% for revenue and 28.2% for profit. Top Glove also a component stock of the MSCI Global Standard Index, FTSE Bursa Malaysia KLCI Index, FBM Top 100 Index, FBM Emas Index, FBM Hijrah Syariah Index, FBM Emas Syariah Index, Dow Jones Sustainability Index. Top Glove's vision is to strive to be the world-leading manufacturer of high-quality glove products that enrich and protect human life, while the mission statement is to be a world-class glove manufacturer providing high-quality products with excellent service through continuous improvement and innovation. The company offers 13 types of rubber gloves to the public, such as latex inspection gloves, nitrile inspection gloves, vinyl inspection gloves, surgical gloves, clean wear gloves, general purpose gloves, and others. Top Gloves have the capacity to produce a production capacity of 40.3 billion pairs per year. This is because the company has 24 factories and 462 manufacturing lines that can produce a large number of gloves. Indonesia is a tropical country located near to the country of origin of Top Glove, Malaysia. Tropical weather in Indonesia allows the growth of fertile rubber trees used in the production of latex. Large and fertile land is one of the geographical advantages of the country from the Top Glove point of view. It enables a large supply of latex to facilitate the production of gloves to the Top Glove processing and manufacturing plant. According to Top Glove Corporation Managing Director KM Lee, she noted that rising health standards related to global population growth have increased the demand for medical gloves. Meanwhile, Chairman Tan Sri Lim Wee Chai pointed out that the rising labor cost by introducing a minimum wage policy have forced the group to increase the price of its glove by 3 to 5%, depending on the type of product. Due to the growing demand for medical gloves, Top Gloves Corporation tends to expand its production line. Top Glove is currently facing a number of problems such as rising labor costs, high initial investment, shortage of educated people, and ecology. The price of gloves will increase by 3 to 5% as a result of the increase in labor cost by product category. Initially, Top Glove also had to invest a lot when first expanding the market to Indonesia.
Okay, next I will explain about the ratio. First is liquidity ratio. Liquidity ratio shows a firm ability to meet its short-term financial obligation, whether the company has the resources to pay its creditor when payment is due. Based on the liquidity ratio shows in the table and the graph, Top Glove Berhad current ratio for year 2018 and 2019 is 1.11 times and 0.97 times respectively. And then for the quit ratio of the company also showing a poor ratio because the ratio is decreasing from year 2018 to 2019. is activity ratio. Activity ratio measure how effectively the firm is managing its asset and generating their sales. For average collection period, ACP ratio, the ratio for the year 2018 is 54.36 days and for 2019 is 44.41 days. This indicates that the company average collection period is good. For Top Glove Berhad, the inventory turnover ITO is having a positive increasing ratio. For year 2018 is 6.6 times and decline on 2019 which is 6 times. However, this indicates that the company inventory turnover is poor. The lower the ratio, the more efficient the business is collecting payment from its customer. For fixed asset turnover ratio, the company ratio shows in 2018 is 0.40 times and 2019 is 0.33 times. However, in 2019, their performance is a little bit poor when the ratio is dropped. Lastly, for total asset turnover for this company, this indicates a good ratio. It shows that the company is maintaining their performance in use its fixed asset to generate the sales. It can be concluded that the company efficient in managing its assets. That is leverage ratio. It measures the level of debt or borrowing in a firm. Based on the debt ratio shown above, the Top Glove Berhad debt ratio is 0.55% on both year 2018 and 2019. It means that the company debt ratio is poor because it still maintains the percent. The debt equity ratio shown for both years is same, which is 0.60%. The time interest earned also not changed. This indicates that Top Glove Berhad has a slightly higher debt in 2019 and we have difficulty raising additional loans. Meanwhile, time interest earned by Top Glove Berhad on 2018 is 34.06 and 2019 is 24.65. Fourth is profitability ratio. This ratio also indicates the firm efficiency in controlling cost and its pricing policy. For GPM ratio for the company is 100% for the both year. The performance is good. However, this can be stated that the Top Glove Berhad is good at controlling its cost of goods sold. Meanwhile, the net profit margin (GPM) for Top Glove Berhad is having a decline from year 2018 to year 2019. This shows that the company performed poor to generate profit from their given level of sales generated. For return on equity ratio for Top Glove Berhad show a decrease for both year of 2018 and 2019, which is 18% and 14%. This show that the company perform poor to generate profit from their given level of equity. For return on asset (ROA) ratio for Top Glove Berhad show a decrease from year 2018, which is 8%, and 2019 is 6%. This show that the company perform poor to generate profit from their given level of asset. Last is market ratio. Market ratio is used to measure how investors view the firm past performance and its future prospect. Generally, the firm will have relatively good market ratio given that liquidity, asset management, debt management, and profitability ratio are good. From the graph above, the earning per share for Top Glove Berhad shows that on 2018 is 0.56 cent and 2019 is 0.47 cent. The company performed poor. The price earning ratio shows poor performance because the increasing in 30.16 times in year 2018 and 30.36 times in year 2019.
Next, I will explain about our decision of Top Glove Corporation. The firm's ability did not meet its short-term obligation. We suggest the company should increase the total current assets or decrease the current liabilities so that they can meet their short-term obligation. The production that produced by the company is good. The company should maintain the production rates or increase the production of goods. We also suggest that they can increase the recruitment so that they can help the citizen by giving the job opportunities to them. The current strategy used by the Top Glove is an export and fully owned subsidiary. Top Glove have been successful with both strategy. However, they continue to find the new ways to expand into more countries. We recommended Top Glove to expand worldwide, which is an acquisition strategy. One of the companies that successfully used the acquisition strategy was Showa Co., which acquired all operations and subsidiaries of Taylor Sons Best Glove, which helped establish a global leader position in glove manufacturing. As the conclusion, we can see in liquidity ratios, Top Glove doesn't perform very well compared to the last year. It means the ability of the firm is bad in converting assets into cash within a short period of time and without affecting the price. As we can see from the calculation, it illustrates the current ratio quick ratio are both bad. Current ratio is lower in terms of short-term solvency and indicate the extent to which the claim of short-term creditors are covered by the current assets, while quick ratio show the firm's ability is bad to pay its short-term obligation without having to rely on the least liquid current asset such as inventory and prepayments. Second, as we know, activity ratio are higher than 2018 in average collection period, total asset turnover, inventory turnover, and fixed asset turnover. Average collection period illustrates the average length of time taken by the firm to collect its debt from the credit sale is decreased. Then, total asset turnover indicates the better efficiency in managing the resources or the management control over its investment in assets. However, inventory turnover and fixed asset turnover are lower than 2018. Inventory turnover illustrates a negative contribution to the firm's profitability. Fixed asset turnover is also indicate the firm's inefficiency in generating sales from the available fixed assets and greater payoff from capital investment. Next, in leverage ratios, compared to 2018, Top Glove stay maintain the percent from 2018 to 2019. This is because debt ratio indicate the amount of debt being utilized relative to the capital provided by the owners is still the same percent than 2018. Higher ratio is less desirable as it indicates the greater use of debt and financial risk. However, debt equity ratio is also still maintained percent from the last year. Debt equity ratio indicate the amount of debt in the financial structure, which is higher percentage is associated with the higher risk. Time interest earned decreased from 2018 to 2019 because the total interest expenses is increased. Furthermore, in profitability ratio, gross profit margin got maintained the percent from the last year and net profit margin got the lower than 2018. It indicates the higher ability of the firm to control the variable cost component or cost of goods sold in the firm, and higher ratio is desirable as it indicates the lower cost of goods sold relative to sales. Net profit margin indicates the higher ability of the firm to obtain profit for distribution to the equity holders and internal sources of financing to support the normal growth. However, return on equity and return on asset are lower than 2018. Return on equity illustrates the inefficiency in which the company is using the asset to make a profit, while return on equity indicate that a business is not doing well in managing its own assets. Last but not least, in market ratio, dividend payout ratio is increased on 2019 than 2018. The dividend payout ratio illustrates the percentage of net income that is distributed to shareholders in the form of dividends during a particular period, which is quarterly, half-yearly, and yearly. It's higher than 2018. However, earnings per share are lower than 2018 and earnings per ratio are increased than 2018. Earnings per share indicate a lower return on the amount invested in purchasing the share. Earnings per ratio is also indicate the decrease in investors' preference of the company's share with the respect to the earnings available and how much the investors are willing to pay for each other dollar of profit generated by the company.